on, everybody? Welcome back to another video. Today we have our Sunday sector recap. So let's get right into the video, but before we do that, please do me a favor, make sure you guys like this video and subscribe to my channel. If you guys enjoy the content, please let me know also down in the comments or in Discord. Alright, so starting out with our economic events for the week. It's an action-packed week in terms of macroeconomic data. A couple things in particular that you will want to note: Tuesday really through Thursday will be the big ones. You'll have a smaller macroeconomic day on Friday, but just as important. So Tuesday we have the core CPI report, year over year, month over month, as well as the federal budget balance, which I will be interested in, but is not super important at this time, considering monetary policy is pretty absurd right now. OPEC monthly report coming out. If you trade oil or energy, that will be something worth watching. The XLE energy chart, which we will go over later in this video, does look pretty bullish. Moving on here to Wednesday, we have core PPI and then PPI as well. I'd be interested to see the core, but a lot of people like looking at the PPI as well as crude oil inventories. So we will see from Cushing, Oklahoma, we will see what they have going on as far as barrels. Thursday, core retail sales, that will be quite interesting, as well as initial jobless claims. Those will be the two things that I'll be paying attention to: retail sales and jobless claims. That is on Thursday. And Friday we have Michigan consumer sentiment expectations. So that will also be interesting. Won't be quite market moving. The sentiment has been fairly low, so I'd like to see that start to tick back up. That would be bullish, more so for the general economy if that can start to tick back up, because it's pretty low right now. So just recapping on what we have: Tuesday, core CPI and CPI month over month, year over year. Wednesday we'll have PPI, which will be just as important, as well as crude oil inventories, which will be interesting for energy. And Thursday we have core retail sales and initial jobless claims. Now moving into the charts, let's start here with the chart of the S&P 500. So we did bounce. If you remember on the last video, I said we were down here near 390, and I was looking for a bounce back up to the 400 level supply, which we got, and we pushed past that. As always, I always tend to underestimate the moves. That's still something I'm working on, but yeah, like I said we'd push down into 390, and that's going to be a pretty key support, and I thought we would bounce back into the 400 supply, and that's what we did, and that was a nice trade. Those contracts were well over 100% for a couple weeks out, so that was pretty awesome. A good week for me. One thing I did like as well is we just bounced right off this trend line. This trend line is going to be something to pay attention to, right? So if we do end up breaking this trend line at some point, I would expect us to create new lows. So we're kind of working in this almost flag-y pattern, something like that. So just that's something to watch, which would be a push back up towards 430. I wouldn't rule it out. To me, I kind of feel as if we're range bound in between this area, this 430 down into here, and the 388s to 370. I know that's a large range on the downside, but to me, we kind of feel range bound until something either pushes us down or pushes us back up. So that's what I'm seeing. Apple has held surprisingly well and does look to be curling a little bit here. So it could try to push back up some towards 160. 150 is a pretty key level. So pay attention to 150. If 150 breaks, that's going to be bearish for the overall markets. But if 150 can hold, then I think we can trade sideways to up for the time being. Moving on to some of the sectors. Again, semiconductors, I believe these are also somewhat range bound. To me, this is, up towards 250. I think it's going to probably stay below 250 for the time being. And down here, we're towards the bottom of the range, down here near 200 to the 190s. So that's kind of what I'm seeing. It looks as if that's kind of what we're doing. This prior high before the big explosive euphoric move up looks like that will be a key support level, so pay attention to that 188, this prior pivot high level over here. Moving on to tech, Microsoft had a great day yesterday. To me, it looks as if it could be starting just like the S&P, right? Because obviously a lot of these are the same stocks. Which looks like it's sideways to me. So I'm looking at this area. That's kind of the bottom of the zone. I'm looking at this area. That's the top of the zone. So this is, 124 to 128. And then up here we got 150. What's 150? Key psych level, right? We've talked about that. Pay attention to the psych levels. Those are always very important. Just like 390 and 400 was on SPY, right? If we want to give another example of that, we can just pull up the S&P 500 this week and look at the first time we touched, where is it? 400, right here. See this? We broke down below 400, down all the way to 390, right? And then look at first time back up at 400, boom, hard reject. That's a key psych level, right? And then now look at it the other way. We push up, and after we already touched it once, now we're consuming the supply. We're eating these sellers up. We're just consolidating. And then now look at the move over 400 to key psych level, right? You had a gap up and a move all the way up to 407. That's a $7 move on the S&P 500, which I know many of you probably think is normal. That's not normal. That's a bear market move in general. That will not happen for the S&P 500. You will not see moves like that. We are in a special market, so you do have to recognize that we are in a special market, a bear market, where volatility expands, right? Prices move more than they generally would in a bull market. There's more volatility. So this is not the norm. It's not something to get used to. In this market, right, you could take advantage of it, but you do have to just understand the market that you are in. Okay, back to the sectors, moving on. XLC was one I wanted to pay attention to. We did bounce off this, right? We bounced off this low on actually a pretty nice volume on XLC. So we got the breakdown, and we pushed down a few more days, right? That's still a, let's see, that's about a, it's a 6.5% move, and we bounced off the bottom on nice volume. See this volume down here, right? This is the daily chart. Look at that. So there are some buyers interested down here at these price levels, which again leads me to believe we are somewhat range bound for the time being. I would expect some back and forth. A range on the XLC would be just, something like this, right? It's never exact. You're never gonna, sometimes you'll be able to get the exact price level, but vast majority of the time you won't. Real estate still slowly pulling back. Did get a nice bounce here. I do expect it to continue lower. What you will notice is this is a clean head and shoulders, right? So shoulder, head, and shoulder. And your neckline is something like that. And look at, that's where we're at. That's where we closed on a low volume day. So I wouldn't be expected to see a flush bearish reject here. That's going to be a little bit interesting. We'll see what happens there. Moving on to XLF. I know a lot of people, let's pull up a weekly chart. A lot of people want to see XLF continue higher. A lot of people think that if the financials can lead, that it is better for the overall markets. And if you will pull up the daily chart, we are somewhat range bound here, but one could argue that this is a inverse head and shoulders, right? Head and shoulder. And I do like this because I like the uptick in volume here on the right shoulder. However, I'm not completely sold, but I do believe we are more so range bound, so you could see this push some right? Push back up maybe into the supply up here, 37, 38. Moving on to energy, we had the inverse head and shoulders. It's been playing out, right? So if you caught the move and if you were starting to get long down here, let's just say you got long here at 73, that's a 16% move. Right now it's up about 10%, but the top was about 16%, and I don't believe that to be done. I believe that probably continues higher. And that's a nice move. Contracts for something like that would have been well over 100%. Moving on, utilities is one of the strongest sectors right now. And you can see, let's go to the weekly chart. You can see it's just continuing to make new highs, and this is the weekly chart, right? And we had nice volume, and now we're standing up right on this prior support. Now, is it a fake out? I don't know. We'll see. But it was way overbought, corrected, right? A technical cool off, as I call it. This is a prime example of a technical cool off. See the RSI right here is up at 78. See what it does? It's back down to 47 here at the bottom. And now price can move higher, and now price is at that same exact price, and RSI is 60. So now it can push more. It can push up into the 80s. Probably not that high because utilities doesn't like to really run like that, but over the course of a couple weeks it could be back up into the 81s, 82s. Moving on to consumer staples, another one that just looks range bound. This does kind of look like a head and shoulders. However, I believe this is probably just range bound, and it's probably just going to keep pecking back and forth. Moving on to XLV, or the healthcare sector, another one that's just range bound, right? You see this. If it were to dip back below this 123 level, I'd be watching to get long. So that is what I'm seeing. So that's what I have for today, guys. Thank you, as always, for watching this video, for the support on the videos. Please do me a favor, like this video and subscribe to my channel. And I will be back on Wednesday with a midweek recap. Thanks.